Hello, everyone. Welcome back to Crypto Insight Series 3. It's a pleasure to be back. I'm happy to be here, to have everyone who's watching us and all the new people that have been following us. And I know that our audience have been growing and I'm so excited. But yeah, so let me just get started, guys. So we got Crypto Insight Series number 3. Today is Saturday, May 28th, and we're doing it 2022. So for our new audience, for everyone who's watching us, for our previous users, for our audience who have been following us, just a quick reminder of what Crypto Insight is. So Crypto Insight is a webinar series addressing all things crypto. So in here we discuss core topics such as the application of technologies as well as address legals and accounting inquiries within the industry. We have every month we have a group of panelists come in on stage and talk about their specialty. So it could be legal, it could be accounting, finance, or it could be just in general, just a crypto 101. Like we have a bunch of experts here, and I'm so happy to just keep on working with them because I keep on learning a lot. And then we're going slowly growing. We right now we are teaching the fundamentals of crypto, and then slowly getting into advanced topics which can actually help you in the long term, because everyone's thinking like, it's too late to get started, or it's am I, people are like, it's too expensive, it's too, is it the right moment to buy it or not? So these are all questions that we have. And then overall, and then how is it changing the industries, right? Technology wise and everything. So it's going to be impacting everyone's life, I tell you that. And that's thanks to blockchain. And we want to be here to educate you guys and tell you all the benefits of it. So yeah, so before we get started, I want to tell you guys to please go register for a chance to win a giveaway. You guys can go to LCube Studio slash LCube Studios IO slash Crypto Insight, where you guys can actually register for the form, and you guys get at the end an NFT. So if you guys want an NFT, so you know that you guys have attended to the series, just go ahead and register. Um, yeah, so we're gonna get started. So in this series, we're gonna have our panelist. He's gonna be talking about the dark market strategies. So we know that right now that the markets is going up, it's going down, mostly down, and that's why we want to share with you guys some strategies. And then we have Giovanni. He's the founder of LIC Tax, and then LIC Tax is an accounting firm that specializes in tax saving strategies to help clients save taxes now and in the future. Not only that, Giovanni have worked over 10 years in the industry. He got a master's degree in accounting from the St. Francis College. He's a licensed enroll agent and also a crypto tax expert. He have been going to trainings. He constantly flying out for crypto tax events, and he's trying to stay up to date because it's a technology. It's overall it's a demanding industry to keep up to date. So no further ado, I just want to welcome him to the stage. Giovanni.
Hey Luis, how are you? Can you hear me?
I can hear you. Yes, I can hear
Wow.
you. Yes, amazing. It's nice to have you here, Giovanni. So before even we get started, it's you want to introduce yourself again? I don't know if I left anything out.
No, you pretty much said everything though. Thank you very much. Yeah, I'm working. I'm the founder of LIC Tax. I've been working, like you said, 10 years as a tax accountant. And then right now, I've been focusing a lot with the crypto market because I have a lot of clients that are investing in cryptocurrency that are working on NFT projects, and they need an expert by their side to be able to give them the best advice so they can, save on taxes and also make sure that they're doing everything correctly and reporting everything the correct way because they don't want to get in trouble later on in the future and then end up owing the government, IRS, or state huge amount of penalties and interest because this cryptocurrency is something that is growing a lot. And there's a lot of myths out there about not reporting on your taxes because it's not traceable. But right now the IRS is going really hard on people who have not been reporting on it. So it's very important, I think, for
I
the
see.
investors to know that they do have to report it. And also, right now, like you said, we're going through a bear market, and it's the time to make some educated decisions so you can save in taxes. So that's what I'm here for today.
Nice, nice. It's nice to hear. So I mean, I'm pretty sure you prepare for this. And then before we even get more deeper into this, I know you're like you help people with their taxes. Do you help individuals or you also help businesses? How you normally work and how can they contact you?
Well, yes, I help individuals and businesses. I help both. And then if you want to contact me, you can go to my website. The website is lictax.com. And there you will find a link to schedule a consultation directly with me. It's be a 30-minute free consultation where we can go over your situation. And that's the best way. That's the best way. That's the first step to do. Then from there, we'll go and take it to the next step on how we can go ahead and start meeting and going over all your financial situations so we can make sure that we understand your situation. We can help you the best way possible.
Yeah, cool. And so you guys know, Giovanni's here. He's part of we're partners with LCube Studios, and I do want to give a shout out to our previous panelist, Teddy Owens. He's also a crypto instructor. He's also in there. If you guys follow our previous series, you guys can get their contact information. I mean, we also have it on the below in the description of the video. We also have QK. She's a lawyer, a legal. So if you're looking for any legal advice or anything, so you guys can definitely go contact her. She is also giving some consultations, so you guys can work at anything regarding crypto, any legal side of it, any for businesses in general. And then last but not least, we also have our Ryan. So Ryan, he's I like calling him grandpa, but he's also an expert in crypto. He's constantly watching and monitoring the market. He's more of a private consultant, and he advise you in strategies and how to invest your money, but in crypto in this case. And yeah, so it's a big shout out to them. I want to say thank you to them. And then, like I said, their contact information will be in the description of the video, so you guys can always contact them, and then get a consultation. Not further ado, I just want to ask you, Giovanni. It's like, what do you, what are some topics you plan on covering today, and also what can the audience expect from this presentation?
Well, today our topic is down market tax strategies. The reason we feel it is important to touch on this topic today, like you mentioned, May 28, 2022, it's going to be on YouTube. So I don't know when you're going to be watching this video, but we're experiencing a bear market in the cryptocurrency world. And I just hope that crypto investors can get some tax education and strategies they can use right now to take advantage of the market. So it's a scary moment, but I think it's also a great moment for investors to understand what they can be doing right now to take advantage of this bear market and also use get some tax savings as well.
Amazing. Okay. I mean, are you ready for this?
I'm
Because I
ready.
am ready, my God. I'm like, let's do it. Let's
Okay.
share this knowledge. So I want to give you all the stage for you. I'm gonna pass it on, and I want to, you guys who are watching this right now in the live stream, please don't forget to register, sign up once again for Crypto Insights series. We have every month we have happening. So you stay tuned, so you get exclusive notes and also giveaways and also NFTs. So yeah, no, it's all you, Giovanni. Let you.
Thank you, Luis. Thank you. And this presentation can take probably between 20 to 40 minutes, I would say, and then we'll have some Q&As at the end. And I hope that you guys can stay on till the end. And like Luis said, register for all the giveaways for the NFT. You never know, that NFT could be worth millions of dollars later on, and then you'll be thankful that you did register for that NFT. Um, so I will get started with our presentation. So I will have the slide on and I'll just go over the points that I have on my slide. So the first slide we have right now, what is a bear market? A bear market is a situation when the total value of the market is falling 20% or more. In other words, it's an environment that encourages selling. Many times when a bear market occurs, investors will be very pessimistic about the potential of the future asset, and they may begin selling out of fear. Bear markets can undoubtedly be scary times for newcomers and even old market players, as nobody enjoys watching the value of their portfolio go down. On the other hand, bear markets can provide opportunities to put money to work for the long run while assets are trading at a discount. Usually, newcomers enter the market on social hype or out of fear of missing out. However, bear markets are actually good opportunities for investors to enter the market as most of the assets trade at a discount. We'll go over some information about the tax benefits you can gain from the bear market. So during this bear market, many of you probably have heard of tax loss harvestings if you've been investing in cryptocurrency, and or have heard of wash sales if you've been investing in securities and bonds. These are very two common topics used that a lot of other medias are using to educate people. And you might be a little confused right now what it really means. So I just hope that I can clear that up for you today. And this can help you make educated decisions. So with stocks or securities, when you're at a loss, you can sell the asset and take the loss on your tax return. But you cannot rebuy the same asset for at least 30 days before or after the sale. If you rebuy the asset, the loss becomes a wash loss, meaning that you will not be allowed to claim the loss on your tax return. For example, Netflix. If you purchased Netflix when it was at almost $700 per stock, which was like around November, December, it was around $700 per stock, and sold it today, which is at about $200 per stock, you will have a $500 capital loss that you can claim on your tax return. But if you rebuy the same stock, the Netflix stocks, 30 days before the sale, which is 30 days before from today, today's May 28th. So if you would have rebought the stock on April 28th at a lower price and then sold it, or if you sell the stock 30 days after if you rebuy the stock 30 days after the sale, which is 30 days from today, June 28, 2022, you will not be able to claim the loss on your tax return. It will be a wash sale loss. So that means that the loss is disappeared because you did not follow a rule that you cannot buy the same stock within 30 days. And that loss that you would have been able to claim, you cannot claim it on your tax return. That is what is called wash sale loss. With crypto, there's a tax loss harvesting, which basically means that unlike stock and securities, you can sell your crypto at a loss, rebuy the same crypto within 30 days, and you will still be able to claim the loss on your tax return. So with crypto, if you had some Bitcoin, you sold it today at a loss, you bought it tomorrow at the price that is tomorrow, you can still claim that loss that you would have been able to take. And I'll go more specifically into details in a further slide. In further slides, I'll go more into detail of how you can claim that loss. But the IRS specifically states that wash sale rules only apply to securities. Cryptocurrencies are properties, not securities, as defined by the IRS guidances. This means that as of now, wash sale rule does not apply to cryptocurrencies. However, this could change in the future. During the Build Back Better Act, they had implemented this. It didn't pass through. It didn't pass through the Senate, but it was trying to be implemented where wash sale rules will also apply to cryptocurrency. But as of now, it has not been passed. It didn't get signed. It didn't get into agreement. So as of now, we can still use this laws. We don't know that if another act passes this year, if it's going to go retroactively. But as of now, you can still do it. But if it does, then if it goes retroactively, then it will be disallowed. But honestly, right now, there was so many times that there's too many acts that have been trying to be that's been trying to be passed that haven't passed through um, the House and Senate. So my personal feeling is that it's not going to pass, and if it's going to pass, it might be for next year. So I think still a great opportunity. We're right now almost half of the year and it hasn't passed. So um, and it's government hasn't really been working together. So I just have that feeling that this tax loss harvesting is going to be something that we're going to be able to take advantage this year. So on this slide, we just have how the IRS considers this cryptocurrency, considers it property. So basically, it means that if you're filing a 1040, which is an individual tax return, you will claim the the cryptocurrency gains or losses on your 1040 Schedule D, and on the Form 8949. Usually, the tax softwares that you're using are providing these calculations for you to make it easier for you to report it on your taxes. So they'll go similar like stocks or securities. They go at Schedule D, Form 8949. That's where you will also claim your stocks and you'll claim your cryptocurrencies gains or losses. We'll be also providing link to this slide, and these slides you can also find this information on this slide. You can also find IRS frequently asked questions, some guidances, so it can help you also as well read it, go through it, read it, so you can have a more better understanding, and then you can use that information and also inform maybe your accountant that if your accountant's not really a cryptocurrency expert, you can give that information to him so they can be better educated. This is honestly what I use to read and understand better the law and understand how to treat gains and losses for my clients. So I do suggest you reading it because I think the client should also understand at least the basic knowledge and then also have questions. So when you go to your accountant, you can have more educated questions instead of just a quick yes or no question. You can have a more educated question because the accountant sometimes they might not have the full knowledge. One or two, they might just um, not be providing you with the all your answers that you need to know because you're not asking the correct question. So I think it's very important for you to use this information from the IRS website to get some more knowledge into cryptocurrency and how it's being treated by the IRS. Okay, so now you have some losses that you want to be able to claim. You want to be able to take advantage of this tax situation. What are the steps that you're going to take when doing this tax loss harvesting? First, you want to look at your overall portfolio. Either you're going to use software. So there's softwares like TaxBit or CryptoTrader.tax or Coinly. There's different tax softwares where you can connect your wallet and you connect your wallet into those softwares, and then those softwares lets you link all your coins and you can see all your coins in one place. If you don't want to use these softwares, you can just go one by one. So if you have something in Kraken, some coins in Kraken, some coins in Coinbase, some coins in Webull, there's different places that different financial institutions that you can buy coins. So there's many people that have different accounts with Robinhood, different places. Either you can go one by one, or you can connect it to a tax software and look at all your coins in one place. So you want to first look at your overall portfolio. You want to look at everything. You want to determine. Next step is you want to determine which which coin you bought at the highest price. So you want to pick which coins you bought at the highest price. So there's accounting methods that you have to enter um, in the software and look at the coins and pick the coins that are at the highest price because those are the ones that you're probably losing money at right now. And then once you see the coins and see which ones you bought at the highest price, you want to sell that coin, realize the loss. So you sell the coin, you realize the loss, you rebuy the same coin, and you'll be in the same position you were when you sold the coin. So what I'm saying is that you sell the coin, 2-3 minutes later, go back and rebuy the same coin, and you'll still own the same coin. So you'll still own the same coin, and you'll have a tax loss that you can claim on your tax return. That is a great thing to do, because one, you're not losing the coin. You're still going to have the same amount of coins at the same amount of value. And two, you're going to have a capital loss that you're going to be able to claim on your tax return. Now, though, for this to work, you have to believe in the coin. If this is a coin that you do not believe is going to ever rebound to the highest point ever where it was before, then there's no point of doing this, because you can just sell. If you don't believe that coin is ever going to rebound to the highest point where it got before or surpass, then why rebuy it? Because you're gonna, if the coin is gonna keep going down, there's no point of rebuying it. It's only for a coin that you believe in. Usually coins like Bitcoin, because Bitcoin has been in the market for so long, and the cap market keeps going up and up and up. It's in a drop right now, but we never know when it's going to go up. I'm not suggesting you go ahead and buy Bitcoin if you don't really understand how it works, but I am telling you that it's supposed to be on a coin that you believe in. Now, when you sell the coin, let's look at Bitcoin. I wanted to just go an example before I went to the slide. Give me 1 minute, go back. Okay, so let's look at Bitcoin. If you purchase Bitcoin in November, when it was at a high, it was at about $67,000. Now, the coin is valued at about $30,000. You can sell it and rebuy the coin within minutes. If you sold the coin and rebought it within minutes, you would have a $37,000 loss. And you will be in the same position, because you will still own one coin at 30,000, and you have a $37,000 loss. Those $37,000 loss you can now claim on your tax returns. But I will now go through with what you can offset those losses with. So when you have this loss, $37,000, you can only offset against other capital gains. So if you have a stock that you sold and you made some money in the stock, let's say you sold the stock and you made 100K on that stock that you sold, those $37,000 loss from crypto can be used to offset that loss. So now that 100K that you sold in stock, you really are going to be taxed on $63,000, not 100K, because you have $37,000 loss from Bitcoin that you can use against that stock. Great opportunity if you have some capital losses. Another one is if you have some real estate property. Right now, a lot of people have sold property, bought property, and there's a lot of capital gains because the market in real estate property has really gone up this past few years, and it has skyrocketed. And right now, the past few months, the demand has been really high, and the supply of real estate was really low. So the property prices were higher than ever because the interest rate was very low as well. So if you sold some property this year and you made some money, it has to be an investment property. It cannot be a personal home, investment property. So if you sold an investment property and you have some capital gains from that investment you sold, those losses that you had from your cryptocurrency, you can use against that rental property investment capital gain that you have. Meaning that you now have offset some gains with losses. Now let's say that you haven't sold any, you don't have any other capital gains. You actually haven't sold any stock at a gain. You haven't sold any rental properties that you've been holding at a gain. Now you have $37,000. What can I do with this? Since you don't have any capital gains to take it against, it is actually going to be, you can take $3,000 against your income this year, and then the rest, the 34,000 that's remaining, is going to carry forward to future years. Now, let's say that next year you have you have this coin that you actually bought back, and it went up. Bitcoin went up to 100,000 next year, and you're like, whoa, this is the, I have to sell it. I have to sell it right now because I don't feel like it's not going to go up more than 100K. And you decide to sell it at that moment, and you have $34,000 carrying forward from this year, and next year you sell this coin and you make 100K in the coin because it went really high. Now those losses, you can offset it with those gains next year. So it's the loss does not get if you have no capital gains to take it against, you just take 3,000 a year, and if you can't finish, and if you just take 3,000, you don't lose the 34,000. You just keep carrying it forward until you have capital gains to offset that income. So it's not really it's not, the loss don't go away. They stay on your tax return. You just have to make sure that you understand, and that you make sure that your accountant is carrying that loss forward. So if you do it 1 year, you do your taxes to TurboTax, and the next year you can do it with another accountant, and then you go to another accountant. You just have to always make sure to always keep a copy of your tax returns. And if you're switching accountants from year to year, you give them the whole copy of your tax return, so they can make sure that they're taking that loss on your tax return. Very important to keep records. You have to keep records of this stuff, because there can be sometimes that maybe you don't give all that information to your next accountant, and that next accountant doesn't know you have a loss carrying forward, and then it goes missing. And then 2-3 years from now, you go to another accountant that's looking at your previous record, and they're like, hey, you had some losses. What happened here? And then it becomes a mess. It's fixable, but it becomes a mess. But you just have to understand that this is a great opportunity for all the crypto investors to take advantage of this tax loss harvesting. I personally am taking advantage of it, and I'm personally think this is the best time also in the market to enter, because during this time I was reading a lot of articles actually from CNBC, and they were saying that this time is where a lot of people are selling off because it's a bear market. And when it's a bear market, people are scared, so you begin selling off your cryptocurrency. So a lot of the people that were just there to buy and not really thinking long term or believing in the coin are leaving the market. And the people that really believe in this cryptocurrency market, and they believe in a certain coin, is when they're gonna enter the market. So when you're in a bear market, it's when you enter the market, and when it's not when it's at the all-time high, that means that the market is probably it's probably gone up, because a lot of people that just are not doing their research, are not doing their homework on looking and understanding what these coins are for. They're just entering because they heard their neighbor next door saying, "Oh, I just made a lot of money on cryptocurrency," so they just go there. They just go and they fear of missing out into this great thing that's happening, and they go and they buy stock, or not stock, they buy cryptos, and then the market starts going up in price and price and price. But those people are leaving the market right now because they're scared. They lost money. They're losing money. They're scared. They're leaving the market. But the people that are not scared, that believe in these coins, are entering the market. So my advice is, if you have stocks or securities and you're at a big loss, don't get scared. Don't run away from the market. Stay on it. Do your research. Talk to your financial advisor. Talk to them. Make sure you talk to a financial advisor before you go ahead and you sell your stocks or securities, because you're gonna lose money, and you can't. And those losses, right now, next year these stocks might go back up. You never know. 2-3 years from now, if you're in there for a long run, don't take that money out. Leave it in there. Same thing with cryptocurrency. If you're losing money, sell it, rebuy it if you believe in the coin. Not in a coin that you do not think it's ever gonna go up. If it's a coin that you believe that's never going to come back, or that you don't really have faith on the project, then then just sell it and don't buy it back. Don't buy it back, because if you buy it right back, it's going to keep going down. You're just going to keep losing money. And this is not about losing money. This is about saving taxes and entering a market at the perfect time. So I suggest you do your research, understand your situation, talk to your accountant before you make these decisions. If you still have some more questions, talk to your accountant, and talk to your financial advisor. That'll be my biggest tips right now. So I'm just going to share a disclaimer right now. This information and material, this information material are for educational purpose only. All parties are strongly encouraged to consult with their attorneys, accountants, or financial professionals before entering any type of investment. The presentation does not constitute an attorney-client relationship or financial or investment advice. I hope that I hope you found this presentation helpful. I hope that if you guys have any more questions, if you guys don't have an accountant or your accountant doesn't understand how the crypto market works, feel free to contact me. My website is lictax.com, lictax.com. You'll be able to schedule a consultation directly with me. It's a 30-minute free consultation. And I'll be happy to answer any questions you may have and hopefully help you make the best decision you can for your financial situation. Thank you. I think you're muted, Luis.
Can you hear me now?
Oh, yes. Good, man.
Perfect. Okay, so now what I was saying is, how you feeling? How you doing? How was it overall?
Oh, it was good. It was good. I mean, I'm feeling very pumped. I hope that whoever's watching this presentation got some knowledge. I know it wasn't maybe very detailed, but if you guys have any questions, like I said before, you can always reach me to my website. If your accountant's not the perfect person that understands this market, feel free to reach out. I have some availability, and I'll be happy to answer any questions you may have.
For sure. But you're not going away, my guy. You're like getting like, oh yeah, you can book a consultation. Yeah, hey, get ready for the Q&A. We have some Q&A.
No, of course.
You're like, yeah, guys. Okay, see you guys. No, come on. Just yeah. So let me. So once again, everyone who's on the audience, please don't forget to register. So you stay up to date with the Crypto Insight series, and from this amazing content. Last but not least, I think we're officially ready for the Q&A. So we do have we have some special guests here too, and I'm actually excited to bring them on. Then let's see, let's just remove this. All right, let's bring in Teddy and Brian into the stage.
Hey.
Hey, how you guys doing?
Good. How about you?
Good. Nice to have you here. Thank you for coming in and making it. Once again, let me introduce you. Ryan, he's like I said, he's a private consultant, a crypto expert too. He's an analyst, constantly watching the market and actually giving you, I guess, a crypto advice on where to invest your money. Did I get that right, Ryan? Or you want to add into that? Okay, and don't forget,
perfect.
Continue to grow, right? That's his business. You can actually contact him. You can message him and email him. Like I said, his information will be in the description of the video, so you guys can always contact him. And Teddy, my guy, my crypto educator, you're looking to understand more about crypto and in general, just have some if you want to learn more about like the terms, the basics, the intermediate, and the advanced, Teddy is your guy. So he's always there. He loves teaching, and that's why we have him here on part of the Crypto Insight team. He's collaborating with us. And yeah, I think, did I get that right, Teddy?
Yeah, you got that right. And what I'm not is taxes. So this has been great hearing from Giovanni. So this has been really education for myself.
Yeah, I know. Tell me about it. It's a lot, right? And then I know that Ryan and Giovanni, they definitely get the hang of this taxes stuff. So that's why it was good. So, I mean, I don't know if you've done your taxes already, but you can, for this year, we know now that we can take some losses, buy it again. I believe is that process called wash shows. Is that right, guys? I don't know. Yeah, so you guys, right now is a bear market. You guys can sell and buy it again, right? That's the trick right now. And then reporting taxes. All right, so I mean, not further ado. I mean, let's see if we got some Q and A's because I definitely have some questions for you guys. So yeah, so all right, how long can the capital losses be carried forward?
So at the moment, capital losses can be carried forward. I think there's no limit to when you can carry forward to it. It can be carried forward to the rest of your life. If you have a big capital loss, you can, and no capital gains ever again in your life, you're just going to be taking $3,000 every single year as a deduction on your taxes. Not a deduction, it would be actually reduction of your income. It'd be a reduction of your income directly from any income from work or other rental property that you might have income from, or some interest from a bank, or any other income that you may have, that you can take $3,000 against that income.
Okay.
So it
Ryan.
doesn't get lost.
Okay.
Carry for as long as you want.
Ryan, do you want to add to that? Because I know you guys are
Yeah.
anything with finance and accounting, that just pass it on to you guys. That's why you guys the ARF experts.
Yeah, Gio's completely right on that. Yeah, you can carry it forward until it's used up, and you only use $3,000 per year against your regular income. But if it's against other capital gains, you can use an unlimited amount of capital loss against any capital gain amount in any year.
Yeah, I mean, can you guys give me an example? I'm like
Yeah, so I can give you an
yeah,
example.
yeah.
So a wash sale kind of example that like I was thinking of before this would be, let's say you had 3 Ethereum and Ethereum gets down to $2,000 and you bought Ethereum at the top. Let's say you bought at $4,000, right? So say you had these 3 Ethereum that you bought at 4,000, which would be 12K. Ethereum goes down to 2,000, so it's 6K, right? So you sell those 3 Ethereum at 2K each, $3,000 in total, right? So you have a $6,000 loss. And if you buy right back in, then you lock in that $6,000 loss. But let's say you go, okay, I think Ethereum's going to go lower than $2,000, and you want to play a little bit of a game where you try to keep your US dollar amount safe, right? So then you go, okay, Ethereum goes down to $1,500. If you go, okay, I'm going to put back that 6K US dollar that I had back in then you get 4 Ethereum. When you sold, you had 3 Ethereum. So you gain 1 Ethereum when it goes down to 1,500. Let's say you're really, really, you have big conviction in Ethereum and you have conviction that the market's going to go down lower. Let's say you wait instead of 1,500, you wait until 1,000. Well, instead of having $6,000 and no Ethereum, you have $6,000 worth of, and double the Ethereum. You have 6 Ethereum for $6,000. So you also get the $6,000 capital loss from selling those 3 at 2K, and then you get to gain twice the amount of Ethereum for that same amount of US dollar when you buy back at $1,000. So say Ethereum goes back up to $4,000 again, back to the all-time high. Now you have double the Ethereum at that amount.
Okay, look at that. I mean, Teddy, you want to add something to when you look at the price right now? It's like Ethereum just went down. I don't know if you want to.
I had a question based on what Ryan was just talking about, and I know Giovanni can answer this because he's talked about this in presentation. You guys were talking about the losses and claiming the losses. For someone like me who doesn't really have any idea, where's the first step to go to understand? I know you said like the facts stuff on IRS's page, but what's the first steps once I know, like, okay, I do want to claim a loss, like say it is tax season. Is there anything somebody like me needs to do before we get a consultation with you or Ryan regarding losses?
I think I'm sorry. You want to go first, Ryan? I'll take it first.
I'll go first a little bit. So basically for me, the biggest thing is just tracking your basis, right? If you make a sale or if you buy crypto, that as soon as you buy the crypto, put the date, the amount of coins you bought, and the US dollar value down. Just put that down. And every time you do it, right, then it makes it very easy to go back in and go, oh, I'm way down on my portfolio now. Let's see. Okay, I bought these these coins here a year ago. Let me sell these coins at the highest amount of dollar value I put in. And as long as you have the information, it's easy to do. It's very easy to do. But if you never write it down and you just buy on the exchange, and then you have to go back to the exchange to see, like, wait, how many times did I buy this coin, and like go through your log, it's going to be very, very tedious.
Yes. You want to add to that, Giovanni?
Yeah, I mean, that's definitely the best thing to do, is to create a spreadsheet and write down every time you buy something and you sell it. Write it down, the dates and how much you sold of it, and so you can keep track of it. But if you haven't done it, and now you've been investing for about 4 or 5 years and you haven't done it, and it's going to be hard for you because maybe you're putting money constantly into the market, but you're not keeping track of how much you're buying, your basis is. There's softwares. I mean, we're not getting paid or sponsored by any softwares, but maybe we should. By like TaxBit, I've used with my clients. Have used TaxBit. I've recommended it because you can link your wallets to that software, and then you can they will pull all your information from your beginning of investment, and you'll be able to see the accounting, your basis of all your investments. So there is softwares that you can use as well to
Yeah. So if I add to that, I mean, from my personal experience, I have multiple wallets, and I had to use a tax software because I had to go back in the years. It's like, all right, but it was so tedious because I never, like what you recommended, Ryan. It's like have a spreadsheet and just record the transaction when you first purchase, and it was a nightmare. I mean, the good thing is, like, if it's like this tax softwares, they actually make it easier for someone who's not tech savvy to just connect their wallet and be able to just get the reports and like you get the forms and everything. Of course, there's a fee for all of this, depending on how many wallets you have. So if you're looking for like a DeFi type of platform, or like if you have different exchanges and stuff like that, that's more advanced. That's when you got to pay even more for those type of software. But for the basics, also, like maybe you're concerned about security or the privacy of your coins and all that, because supposedly everything should be private, right? So what you can do is that let's say if you're using Coinbase or Kraken, there got to be a way for you to export your transactions, your records, and then you have to classify them and then upload them to this crypto tax software, and they can do the rest for you. But it's still a lot of work and this tedious work, like you guys mentioned. But like going forward, like for anyone who's watching us right now, it's just like, if you haven't done it, just start keeping track of your purchase, because it's going to help you in the long run. But yeah, so that's my personal feedback from this is a learning experience. So for anyone who's watching, I just want to say that. Yeah. And then I think we're ready for the next question. All right. Okay, so if I bought crypto at let's see what happened there. Yeah, if I bought crypto at 9K for 2 years ago, but I went to 67K, but now it's about 30K. Do I qualify for the loss harvest? How would that be?
So you're still going to be above your basis, it looks like. So I mean, it looks like it's going to be a capital gain. Like you only get I see kind of what he's asking. So Gio, you want to take it first?
Yeah, so it looks like this it's confusing, this tax loss harvesting, and a lot of people invested 2 years ago. Bitcoin was at $9,000. And then last year, or like around November, or this year, I think, when it got up to almost $67,000. And now it's at about 30. So maybe they were looking at the portfolio. They're like, oh wow, I'm already making about $56,000 in this coin. So they probably think it was unrealized gain because they didn't sell it at the point and you buy it another point. So that's basically what it means. Those losses, that gain that you had was fictionary because you didn't take action of selling it at that point, and then rebuying it or buying more coins at that point. So that gain never happened. Your basis is $9,000. You're still making money because it's at $30,000. So you're still making money. You you're making less money than you were previously when it was at 67,000, but you're still above what you paid for that coin. So congrats, because you made a great decision still. So you're still up ahead. So no, you wouldn't qualify for a tax loss harvesting.
Yeah, basically what would happen is if you sold now, you would be getting a 21K capital gain. And if you say you rebought back in immediately at 30K Bitcoin and it goes down to 20K, then you could sell it and rebuy back in again and have a 10K loss from that.
Okay.
And so it basically make your long-term capital gain 21K or 11K instead of 21K.
Okay, yeah, that's another strategy you can use.
Yeah, it's a strategy you could do. Like, so yeah, if you're like, okay, hey, I've had this since it was 9K, it's 30K. It went up to 60 or 70K basically. I didn't take profits. It's now down to 30K, but I think it can go lower. And you have conviction, you think it'll go lower, then sell now, take the 21K capital gain hit, and then buy back in when it gets to be 20K. And even then, you'll have more Bitcoin than what you had too, right? Like, so Bitcoin at 30K, you sell and you buy back in it with the same amount of capital, 30K. When it's 20K, you're gonna get like 1.25 Bitcoin, 1.2 Bitcoin, something like that, basically.
But do you actually suggest that someone that bought at 9K to sell it at 30K? But if Bitcoin looks like it's going to rebound and get back to 67,000? Right
That's
now,
what I'm saying.
yeah, I think it's. I mean, we're not financial advisors here, but I think that it'd be safe to say that. Well, not safe to say. Nothing's safe to say, but it would be. It can probably. Right now, it's a bear market. It's probably not the best time to sell it. It's probably going to go back up. This Bitcoin, so we never know.
If you want to be super cautious, you could say, and the reason why you do that, right? Like I think in a bull market, you got to be very proactive to save your profit, right, or to take profit. And in a bear market, I feel like you got to be more proactive to preserve your US dollar value and preserve your coins that you have, and try to gain more coins in the bear market. So, yeah, the example I'm giving is more probably more something like me or Gio or maybe Teddy would do as an aggressive way. If you want to be a little more conservative, you could do maybe half of that Bitcoin, right? Just sell half of it with the thought of, okay, if it goes down, I'll put back this half that I sold. If it goes back up, then I still have my other half that's still in this from the 9K.
Yeah, that's probably the best. Yeah, that's probably a more conservative way to do it.
That's a way more conservative way to do it. Yeah, you'd only sell the whole thing if you're like, man, this is about to go to 20K. I really feel it's about to go to 20K.
Oh yeah, if you think it's going to go to 20K, that's why you have to do your research and talk to a consultant or an expert like Ryan to make sure that you understand that what you're looking at what you're going to be looking at to see if the coin's going to go under 30K to 20 or 10.
Okay, look at that. I mean,
we come in and look at it as just kind of the market sentiment, right? Like, are people?
I'm sorry.
Like, are people? What are people saying? What's the market kind of? What's the market sentiment? Yeah, and also too, looking at charts. Charts are a good way to look, so you can kind of see what the. One of the things you can look at the volume trades, right? Like you can see at a different price point, like if people have limit orders in to buy Bitcoin at a certain price. So if you see a bunch of limit orders to buy Bitcoin at 27K, 25K, 22K, you know there's a lot of support of people wanting to buy at these different levels. But if you see like, okay, there's not a lot of limit orders set to buy Bitcoin at any level below this, then you know, like, okay, if it hits that level and goes below it, it may go in a free fall for a little bit before it catches traction again. And so if you're looking at it that way, right, you're seeing market sentiments negative, and you're looking at the charts and seeing less and less limit orders set at different prices, you can kind of go, okay, I think this could go down. And if we have a black swan event, sort of like Terra Luna was, you can be like, okay, this is for sure going to go lower before it goes back up again.
Okay.
Yeah, that's good. That's a good thing. That's a good way to look at it and good research to do.
I want to give a chance to Teddy. It's like, Teddy, you got any feedback for this? But I definitely have a question for you.
Yeah, feedback. I think the question, I had a question, and then those guys just answer it, as I just listen more and more, which is fantastic. And Ryan just started speaking mumbo jumbo there for a second in my brain, but he might have actually just answered this question I was about to kind of talk about, and what Giovanni was saying in his presentation about the 30-day situation. Now I like to use my example real quick to kind of ask a question. you guys are talking about $30,000. That what about, we're talking about cryptos that are down under $1. Let's say I had an average buy about 9 cents a token, and I sold it at a loss at 7 because I know the token's going to keep dropping because I want to buy it back in once it drops to a penny. So once I take the exact same, I sell it over to a stable coin, 7 cents, all of it, I got out.
Mm-hmm.
So right there is already, if my average buy ends at 9, that's a loss. But then I want to buy back in at a penny, and then that right there takes me more of a gain. Does that matter since it's in that 30-day window about anything to do with taxes? Since I sold but also bought back in, I also got a loss, but I also got a gain.
You want to take it, Gio?
Yeah, you can take it, Ryan. I'll go after.
Okay, yeah. So with that, yeah, you'd have a loss from selling it, right? And then I see what you're saying. That's basically what I've been doing with a lot of my different plays and coins. Is I'll sell at a loss with the thought of, okay, once this goes down to this level, I'm putting in a set amount. Like I'm not just kind of thinking, okay, it's going to go down and I'll buy back in when it goes down. If I'm selling at a certain price, I already have another price I have in mind to put that capital back in at. I'm not just kind of letting it go. So yeah, like what are you saying? The example, like 7 cents, right? Like it could be, okay, I'm going to sell it at 7 cents, take this loss. And then I know when it gets down to 5 cents, I'm going to put back 25% of that capital. If it goes back to, and then if it goes down to 3 cents from there, I'm going to put back 50% of the remaining capital, and then the remaining amount after that, potentially. But the thing is, if you're planning to make a sale, always have a plan. Don't just sell and go, okay, I don't know what I'm doing next.
Yeah, so that's kind of laddering back in, right? Like, is that what you would call that? Instead of just waiting to go to 1 cent, 100% in, it might not. So you're being safe by putting kind of like a quarter in. Is that considered laddering kind of?
Yeah, laddering in, like you laddered out completely, laddering in, laddering out. Yeah, basically is what it is. Yeah.
Okay.
Yeah, and you don't need to wait 30 days. It's cryptos, you don't need to wait 30 days. Doesn't matter. The 30 days is only for securities and stocks. Is when you have to wait 30 days to rebuy the same coin, or the same stock or security. So,
Got it.
yes,
Minimum 30 days for that. Okay.
Yeah, for that. Yeah, with crypto, you can do that the next day, 2 days, 3 days, 4 days later. You can rebuy the same coin if it goes down to where you're happy at and you want to rebuy at that price. So you don't have to wait the 30 days to rebuy the same coin.
And there's no max time if it's over 30, 60 days. Rebuy, it doesn't matter. Okay.
No, that's up to you. You can rebuy it at any time you want. So so with securities and stocks, you can't rebuy the same stock for 30 days. Then after day 31, you can rebuy that same stock. So if you sold an Apple stock right now, you can't, at a loss, and you want to claim that loss, you can't buy that stock, and you can't buy that Apple stock for 30 days to claim that loss on your taxes, or else you won't only be able to claim that loss.
Cool, thanks.
Yeah.
Nice.
Yeah, and just to confirm, how does crypto get taxed? Where does it fall in? Just to clarify, I know you covered that in the beginning, Giovanni.
It's capital gains. So capital gain tax.
Okay. So
long-term capital gains, which is the best rate, is if you hold the coin for more than a year. So you have to make sure to hold that coin more than a year. If you're at a gain, especially to sell that coin, you get the better rate, the long-term capital rate. If you hold it for longer than a year, if you hold it for less than a year, you get the short-term rate. And it's basically your ordinary income tax bracket, wherever you are at the ordinary tax bracket, it gets taxed. So holding it for less than a year is not good, especially at a gain. If it's at a loss, then short-term, long-term, you can take the same loss. So if it's at a loss, if you hold that loss and you've been holding that coin for less than a year, and it's less, and you're losing money and you want to claim those losses, you can go ahead and sell it and claim those losses. Short-term, long-term losses can be claimed. That doesn't really affect the tax bracket.
Okay, so that's you need to have in consideration if you're like single, married, and all of those. Okay, good to know. I get. All right, and we got time for one more question. Let's see. Do we have one more? Okay. Yeah, can you explain any on the accounting methods such as FIFO, LIFO, and HIFO? I think Yeah, I saw that in your presentation. It's like, what is that? Can you give us a little bit more? I know that Ryan and you are like can really talk about those. How about you, Teddy? I mean, how about we hold on to them, the experts, and how about you? What did you learn? You got anything in there?
I'm just gonna sit and learn like you, Louise, right now. See what they have
Right,
to
all
say.
right, yeah, let's do it, right? All
I'm
right,
here to
let's
ask
do it.
questions.
Look at that. That's great. All right, Ryan or Giovanni, who want to take it first?
I'll take it first.
Okay.
So this is basically the accounting method that is used to understand which value are you going to be using to sell your currency in. So FIFO means first in, first out. That means that if you pick this type of method when you're going through your software, that means that you're going to be selling the first one that you bought is going to be the first one that's going to be sold. So first in, first out. That means the first Bitcoin that you bought is going to be the first one that's going to be sold. That doesn't mean that it's going to be the one that you pay the most for. It might be the one that you pay the least for, but if you use that method, is the first coin purchased, the first coin sold. If you put LIFO, it means the last coin. So I'm going to use Bitcoin again. So if the last Bitcoin that you purchased, or the last little amount of Bitcoin that you purchased, is the first one that's going to be going out. It's the first one that's going to be sold. And HIFO basically means the highest coin that you purchase. So that means the highest coin that you purchase is going to be the first one sold. So if you're doing capital losses, if you're trying to claim losses, it's probably going to be HIFO, the one that you're going to be using, because you want to be selling the coins that are losing now. So you might have bought, like previously we had that person that had the coin they bought at $9,000, that Bitcoin, but they also maybe they might have bought another coin when it was at 67,000. So they want to sell first the highest one, which is the HIFO, the $67,000 coin, to be able to take those losses since the market is down. So you always want to use the highest one you bought to take those losses.
Interesting.
This is when we're talking about losses. Now, if there's gains, you want to probably look at different methods, but basically for this is the way that you want to. This is what it basically means: LIFO, FIFO, LIFO, and HIFO.
Okay. How about do you want to add to that, Ryan?
Well, that's great. Yeah, everything you explained on that. I use HIFO myself, which is what he was saying in the presentation with specific identification. And that's basically HIFO. So I use the highest in, first out pretty much all the time with mine, especially with the capital losses, trying to tax loss harvest.
And then we need to be also clear. Can we use this all 3 at the same time, or how does that work?
Usually you just choose one method typically and go with that. So if you're going HIFO, usually you're going to just stick with HIFO, whether it's what you're doing, or LIFO or FIFO. FIFO, LIFO are going to be more probably people that are more corporate or a business trying to do this stuff instead of being HIFO as much.
Oh, okay.
Where they're just sticking with like, nope, this is exactly what it is. I know I'm going to go to the very last one that we bought or the very first one that we bought and keep going from there.
Got it. Yeah, and then for this strategies, is it when we use it when we do the taxes, or when do we actually like as we keep on track of our basics? That's when we kind of use this. We pick the strategy, I guess.
Yeah, so you want to probably be using this when you're looking to sell, and then whenever you analyze your portfolio, you want to analyze it in all 3 methods. You want to use all 3 methods to analyze your portfolio to make sure that you use the best method that is for you in your situation.
Got it. And Teddy, do you have any questions? Or any other questions for them?
Keep them coming. No, on the topic of all this, you guys are talking about first in the losses and the gains, and like waiting a year, to not take such a hit. What was it? Sorry, my brain for long-term loss. Is that what it was? If you want to wait,
long-term capital loss, yeah.
Capital loss. Okay, so if we, say you freelance, you have a 1099, you pay all the taxes, so 30% of that goes to taxes, right? So just in general, you pay your own taxes. So when it comes to short-term, long-term, what is the percent now, and can it change in the future? So what's the benefit of waiting over a year?
Okay, so So the gain, the capital, let's talk about this only matters when you're selling your stock at a gain. At a loss, it can be short-term or long-term, you're still going to claim the loss on your taxes. That doesn't come into play. But if you're selling a currency that you're actually making money at, you want to make sure you want to be selling, you would have held that coin for a year at least to make the sale, because the tax rate depends on your ordinary income, where you are tax-wise with your income from your 1099. And then if you've been holding this coin, it gets taxed, I think it's 0% if you're from one limit to another limit, 10%, 15%, and 20%. Am I correct, Ryan?
Yeah, you're correct. And then
Yes.
it's 20% is basically through the Fed, and then you can maybe have like 3 to 5 or 6% with state on capital gains, depending on what state you're in. So if you're like Texas, Florida, you're just going to be paying the Fed only.
And if you sell it at a short term and you're making a gain from that crypto and you're selling it, that coin, less than a year, you're going to be taxed basically in the same tax bracket that your 1099 income is going to be taxed in.
Mm-hmm. Yep.
Now,
Yeah, so if
So-
you're making a lot of money and you're like, oh, no, I'm just going to cash this out, you're going to be paying at whatever rate you're at with your ordinary income. But if you're, it depends, right? If you're really savvy tax-wise, you can take a short-term hit on it, and then hopefully, if you've done the strategies like Giovanni was talking about with the tax loss harvesting, you can kind of offset that hit you're going to have.
Exactly that. All right, guys. I just wanna wrap it up. I want to thank you guys for joining us for this Q&A. I'm really happy and excited that we're still going, and we have next month we're gonna have another one. Stay tuned, please. So yeah, I mean, before I leave, just one more thing. The panelist information will be in the description of the video, so you guys can definitely ping them, follow them. And they can give you free consultations, and you can learn more about crypto in general. So Giovanni, LIC Tax, Ryan, continue to grow, and Teddy Owens, you can find it online too. So everyone, yeah, thank you guys for being on stage, and then let's just so I just want to say, guys, don't forget, if you want to start building on Web3, I would like you guys to please scan the QR code, and then you can get get a domain on Unstoppable Domains. It's like if you're really planning on moving to Web3, or you're already on Web3, right? We're already learning all about Web3. Now you're just like, all right, I want to have my business now on this new internet. You want to start just simple with getting a domain. So you can go to Unstoppable Domains, just get it, type in your domain name, and then you will have a crypto domain. And then as we keep on moving further down the Crypto Insight series, we're gonna teach you how to integrate, this to your domain, and yeah, so people can now find you on the internet on Web3. So Unstoppable Domain is really great. So it's cheap too. So you guys can go grab a domain, and it's just one-time payment, and you have it for life. So you just go there, lock it down. So last but not least, I would like to introduce again LCube Studio. So LCube Studio is a design and development studio. We turn your ideas into reality by creating bespoke frameworks. We leverage, to build scalable products, MVPs, design and engineer to meet your business and technical specs. We're here. We're constantly developing applications. So it doesn't matter which stage are you in, either you're early stage business or you're corporate level. We go in, we fit in anywhere you guys need. So it could be as simple as making an app, a widget on the internet, but we don't make widgets. We make Ferraris for the internet. Where it could be some as complex as making a full scalable application. It comes from, from the beginning, from designing it, having a design, having a wireframe, having mock-ups, so you can actually visualize your application. And then further down, integrate some technologies to start developing, like programming it. So that's what we do. We program everything from scratch, or if, like I said, depending on the solution you're looking for, you already have pre-built tools. We just integrate with that and continue building that application. And we can also do the deployment. So we take care of everything. And then if you're also looking to build something on Web3, you can contact us. We can also help you with a free consultation and give you some more guidance on how to get started with Web3. Integrating your application, either it's your app, a website, whatever it is, we can help you. Yeah, so that's LCube. I want to thank the panelists today, which is Giovanni Inga. Thank you, LIC Tax. So there you have their Facebook, their LinkedIn, and you can also go to lictax.com to get a free consultation. Yeah, so I want to thank my the team. Lucas, Tenzin, the co-founders, and myself, Luis Munoz. I'm the CEO, formerly the CEO of LCube Studios. So we're looking forward to continue to grow this community and help adopt the blockchain technologies, crypto in general. So yeah. So if you're thinking, it's simple as integrating like a Web3 payment. Like if your website wants to accept crypto now, we can help you integrate that as well. Yeah. So we came to the end. I want to say thank you. Everyone who stayed tuned for the entire session, everyone who's watching us now. Thank you very much. It's been a pleasure. And like I said, last but not least, please register. We're gonna be, sending you instructions on how to claim your NFT. So just go in there, go to LQstudio.io/crypto insight, register once again, and you will receive an email with the pop link, so you can claim your NFT. Yeah. So thank you guys. Stay tuned for the next one. Bye bye.